Hello, can you see my slide there?
It's enabled, yes, thank you.
Okay. Yeah, good afternoon all in the house. As the MD has introduced and Mr. Slam, my name is Ambrose. Yes, we're going to look at the opportunity in the market despite the uncertainties all around. Like the MD said, global to down. We go to a globally, locally, we are seeing uncertainties. But in all this, there's opportunity to make money in equity market, depending on your investment objective, because it's very, very important to know exactly what you want in the market. No, traders have different way of trading, investors have different way of investing. If you're an operator like a stockbroking firm, you have your trader account, you know how to play. That means it is your goal to determine the kind of stock you should play and which sector you should be. And that is why, the few time we have now, let's just discuss. Because if I should follow my slide one after the other, step by step or slide by slide, it will take us like 1 hour to do this presentation. But I will take summary of all this so that when we enter the question and answer session, we can digest more of what you want. But to start with, I would say that the global economy is not looking too friendly. And if you also look down home here, you know also that our economy Hello?
Yes, you can hear you. You can continue.
Okay, thank you very much. Yes, as I was saying, globally down here, we've seen that the economy has been in challenges in all this global and local economy. But the good thing is that in all this oscillation or a kind of a good economy or political uncertainties, there are opportunities for one to make money if you know exactly what you are doing in the market. And that is why in this presentation, we want to look at how also to take that decision to know the right sector, the right company, and also how to play, because there are two major factors that drive equity prices. One is looking at the fundamental, one is looking at liquidity in the system. Another thing is human perception. What the reaction to either to an industry or towards a particular stock or the particular investment window. Before now that our interest rate has really moved the market up and down. When interest rate was very low, we saw a lot of activities in the equity market. We're seeing interest rate being adjusted or because to not control inflation. We're seeing also funds also moving to the fixed income market. But because of high inflation rate we're seeing also in our economy down here, you notice that since all this more than 2 weeks now, we're seeing a slow kind of activities in those fixed income market because of a high inflation. And also uncertainty also threaten the economy in terms of the sovereignty risk. People also slowing down and buying into some bonds. But I will tell you, whatever is happening in the economy, it moves from one circle to another. And you, as an investor, should to know exactly where is the economy at a particular time. That will give you an edge to know exactly what to do when it comes to what equity investment. When it comes to equity investment, that's why today I want to tell you that understanding the big picture in the economy will go a long way to help you to know exactly to pinpoint the area you should put your money. And there are three basic things that drive this economic cycle or the movement in the economy. One of these factors is inflation. Another one is interest rate. Another one is national output, or call it industrial output, anything you want to call it. When these states are moving around, to tell you which sector, which area, or which company you should beat your tent as investor. Why interest is very important is that circular flow of funds is majorly controlled by what? By interest rate. When there's high interest rate, you see that fund will be leaving one investment window to another. When it is low, it moves to another. And also, it also affects the economy. When there's high interest rate in the economy, you see that expansion will be reduced. And when there is low interest rate, you see business also will be flourishing because you want to take advantage of cheap funds to go into new business, to expand, to do more. Also, when there is this high interest rate, you can see that your national output also will be high, industrial output will be high. But when it is high, it will be low. You understand what I mean? These are how the economy moves. That's why in economy, we have what we call five circle of the economy. We have the what we call the early expansion, have middle expansion, and late expansion. And this movement is controlled by what? Rising inflation, rising interest rate, and what? National output. If you are having a low interest rate, we're about to see that the economy will be. That is what we call early expansion. When it moves, interest rate is moving and inflation is moving, to see you go to the expansion. At that time, your output is high. National output is high. Industrial output is high. Just like back here in Nigeria, if you look at the figure that were released early this month for what we call a purchasing manager index for the month of July, we saw that we move from as low as 50.9 to almost 53.8. That there's improvement in terms of industrial activities, despite the high interest rate we are seeing and inflation. This also should guide you exactly what to do. And which sector is this that is, we are seeing some activities improving, or which sector is that the return in that sector in terms of performance is ahead of what inflation, and these are what we'll also be looking at as we go in. And that is why you see some fixed income players in the market, they are still looking to see which part of the equity market, which sector in the equity market, which company has potential to give them a return that will be above inflation rate as we speak now. And that is also those long-term bond again. You see that the return also remain below inflation, even below 15%. They're also looking at which area can I put that, if I'm expecting to get a dividend yield, where can I get dividend yield of 14% or 10% plus additional capital appreciation between now and end of the year, or between now and March, that will give me even above inflation figure. And that's why I said, when people are complaining that the market is a bit down now, not moving as a result of the positive earnings that we have seen, I told them that they should not panic or feel anyhow, because the market is really in order. Earnings are telling that the companies are still doing well. And you can take back to see that post COVID-19 performance, we have seen aggressiveness in most of the company on the exchange, not only Nigeria, globally, that their numbers have remained an uptrend. But because now liquidity in the market very slow, or even the general economy, that's why I see that price are not responding to this positive earnings. And also in technical, what we call factor in the expected price already. These are part of why the market is slowing down. But don't forget that in any market of the world, when you start seeing third quarter earnings of a company, it changes the face of that company, because we have seen what they have done for the previous year. You can easily now forecast what's expected from them in the full year. That will change the psyche or perception of the market players once they start seeing the third quarter. That's why I say anybody that's in a good position now, as I'm speaking now, don't need to panic, because it's still going to rotate to that level that you see earnings also coming and market respond. Why you are seeing a bit too slow markets are trending, declining marginally is because there's no liquidity in the market. And also don't forget that this same market have given us almost 22% before now, until around June, July, before it started coming down. I tell you that profit taking are still there. And also the stocks that push the market to this level, most of them are still stable. Why are still coming down? Because of profit taking. And also if you look at the market again, our market has changed. And many people may not understand this. Why market has changed that before now, after that, investors have been in the banking sector before now. But as we speak now, banking sector is receiving less attention from this major, the investors in the market, and especially even the stockbroking firms or the institutional investor. Why? They see that there are some other industries that are just newly listed, and also where things are happening now, and the return in that sector are still attractive, and also can also give them return above inflation. That's why I see in sector like the telecom sector. Look at what is happening in the agriculture sector. Look at what is happening in the industrial sector. They are successfully increase their cost of their products, and at the same time able to pass it to investors. That's why we are seeing positive number. But still, market is not reacting to them. But there's a time that is coming that market will start looking the worth of all these stocks and all these sectors. That is why you, as an investor, since investment is against the future, against tomorrow, for that, anything we are seeing now, we are still calculating what will happen the next day, what will happen in the future, and that is why investing with number is also very important. You know when earnings will come to the market, and you know that every company in the exchange has to release results every 3 months. That means if you know that and you have that in mind, for those that have December year end, you know that by end of September, in October, when it starts coming, you start changing the face of the market. And also, once enter September, designing investors or traders that we call position traders will start positioning ahead of the number, and to see if market react and to make quick return. But those investors that want to see the number also before they start buying for dividend are still in the market. That's why they have different players in the market. This has the way of shaping the market. For me, there's no cause for alarm in our market, because we see some sectors and some individual stock or group of stock that has the potential to give us a good return at the end of the day. And also, don't forget that this pre-election year in Nigeria, and in pre-election year, we want to go back to history to see how pre-election year has performed in our market, because this is where we play. We know that something is happening in foreign market, and we know that before now, we have foreign investors dominating our market. But as we speak now, their president has been reduced to even below 13% in the market. Institutional investor in Nigeria and high net worth investor, investor like you and I and other traders are the ones that sustain our market now. If there is a market and understand how the policies in our environment is being played or the way it goes, we know that pre-election year activities in the market can change because of one thing or the other. But we want to look at the table we're seeing now. In the last almost, let's say, in the last 24 years, apart from the 4 years, you can see that there is different performance in different pre-election year in our market. And there are some different factors also that contribute to this different performance we are seeing. In the first year that we're seeing here, 1998, this is where we are preparing for the first democratic election again after we have seen the military government and all that. For that, there's still fear. Is it going to hold or not? You can see people then were not having confidence in the market because I'll tell you, perception and confidence, liquidity, all these are what support market. Then the confidence is not there. But after that, the next year, 1999, we saw that the election came and got another president, the president Olusegun then market started changing, confidence started coming, start seeing new policy coming out, rolling out all those things, even though what I don't like telecom, others started coming and then. But the next election, because we have seen the performance of the government for the last 4 years, during that election year, there was no fear. And this is the government that has seen power. They saw that yes, opportunity, market was doing well that election year, but liquidity was in the system. That same trend was repeated in 2006. You can see that in that 2006, we have a increase from almost 10.6 we saw in the 2022, then 2006, sorry, we saw about 37.8. This more confidence in and liquidity in the system. 2010, now again preparing for 2011 election, some market maintaining a positive performance in that same pre-election year. But in 2014, preparing for 2015, you know what happened? Insecurity, as we're seeing these days, we are seeing too rampant there. Even we have to postpone our election date because of insecurity and all those. And people also will see a lot of campaign strategy, change master here and there, change the government, change all this one. It came, people were panicking, there was fear. But God being God, also knowing that it's a democratic economy, a democratic government, we're able to conduct the election successfully. That because of the fear and the people selling down, then we see more foreign investors as at that time in our market, because it's not that their own economy today slowed down, and that brought the market down to what we saw about 16.4. But after the election 2015, we saw the market rise for like 2 months before it started. We're waiting to see policy and decision, which was delayed. In 2018, the same trend because of 2019, we're seeing the 4-year performance of the government. The people are trying to see if change will come, but because one or the other people are afraid, let's see what happened. Let's wait and see. There was fear again. But now that we're also in 2022, people say, what is different? I will tell you, it's not just because it's pre-election year. It's for the new listed company in 2021 or 2020. All these telecom companies that came on board changed the face of the market in 2021. We saw the market return a lot of good performance. We saw it 2020, 2021, and 2022 to date. Because of this high cap store that keep performing well, because of potential and expectation, especially from we saw what happened in the telecom company. Airtel was listed below 1,000 naira. A rally above 1,000 naira, even tend to touch about 2,000 naira. This one also supported the market. We saw MTN that was listed around 95 naira. Also moved above 200. You see, these are the things. We saw the life of Dangote Cement. This is what changed the market. But in all this, you say, where is the banking sector that has been the toast of investor, the major that has the volume and everything? Because the return in this sector was not too attractive, attention moved towards the oil sector, to telecom, to the industrial goods, to agricultural sector, and even to healthcare that same year. And that also supported the market to this level. And that means that as was in another pre-election year, there's no need to panic. We understand our terrain now. That is because foreign investors were in the market all this period and fear. But now I'll tell you the way the primaries of these political parties were conducted in previous months, we saw that yes, must be a little peaceful despite all the money back and all this stuff. That's what coming up. And among the 3 presidential candidates who are seen, anyone that come on board, we know that they have no plan for capital market. These are what people are looking at. That's why the panic was not there, but it was not too much as before. But still there is panic, but there are some people that, because it's pre-election year, they are not more comfortable with the market until election finish. But there are some like me and others in this class that understand that in this market, even though there's that market, there's opportunity, but still taking advantage of that opportunity in the market. And that is why we're having this webinar, so that we can share all this, so that at the end of the day, you'll be in a better place to know that where you are, you're in the right stock, you don't need to panic, but rather you keep your eyes in the market, combine your fundamental and technicals to know exactly what to do. That is how to go. Then tracking the opportunity in the market. As I mentioned earlier, I mentioned some sectors, and you need to look at the economy, the nation, the stock market, the companies, and also reaction, which I said that in all these market circles, economic circle, there are also market circle, bull and bear. There are also in technical what we call overbought, and oversold. These are the trends that we're looking at. Where is the market now in the economy? Are we in a late expansion, or are we already in contraction? You ask yourself, when economies are in contraction, which sector benefits? As a nation, what is the policy? We have the security, because this has to do with the nation. What is the policy of the government? Also look at the stock, like I mentioned, whose stock do that, and what's the performance of that company? That is also what is the reaction of people or market players to that company exactly. These are what we are looking at. The government policy is key in a sector on economy, because that has a way of reframing the activities of people in the market or in the economy, because they know to know exactly what is happening. That's why they want to watch what is the government policy, what is their body language. You can see that there are some policies in the government today in terms of incentive, in terms of intervention, in some sectors that also impacting those sectors, profitably, as to speak. You can see what is happening in that sector. Even the healthcare sector we're saying today, before now, health sector is a place that people don't like to play. But today, because of COVID-19, I saw kind of, the government intervention in that sector. It has changed the operation in that sector. It has changed their performance, and that is why life of stock like fixing, moving from low as a 4 naira to almost touching 12 naira. It has a lot of performance of the company. It has a lot of the kind of awareness and positive sentiment for that sector that we're seeing. This is where you understand government policy has a major role to play. You see the intervention in agriculture. Also, we know that what happened in the global economy has a lot of distortion in oil price, crude oil. That's also impacting positively on the oil and gas sector. Because also we're seeing that prices of PMS and others have gone up. It's also impacting on the local market, and not those that also include business. You see also what is government spending, what is the policies around it, insecurity. These are what influence also the economy. But if you want to the economy, you want to look at what is the foreign participation, what is the foreign loan. You know that today we are servicing debt with almost more than half of our revenue, which is not too palatable. But you can see that will also give a sense. We import most of the raw materials, apart from companies that have done backward integration in the manufacturing sector, and also in the agricultural sector, that are sourcing their raw material within here. Those ones, but to see what the local loans also having everyday bond. Are they what I usually like to see? Is it impacting the economy? These are things we want to know. What the policy on the industry? What is the exportation content? All those, and that is why today we're having a world exchange problem. Are we exporting enough to bring us more on a hard currency? Is it only the crude oil as an economy that we're depending? High interest rate, like I said earlier, all these are things that will change the face of the economy, as we have discussed earlier. Also, we want to look at what is the shareholding structure of a company. We want to look at what the share capitalization of a company. Like in the market here today, that a company that has about 40 billion market cap can have as low as 10% market float because of the 40 billion market cap and above. And that kind of company, you know that the shareholding structure is tight. It's inferior. That means price of that stock will relatively be stable. You say what is happening in Nestle today, that Nestle have remained above 1,200 for a long time. It's because the shareholding structure is tight, and at the same time, the Nestle Switzerland has continued also to acquire this company shares. It tells you that they have confidence in Nestle and also in the economy. That's why the up and down economy. That's why they are increasing their stake. Look at what is happening also in Dangote Cement, in that Boa. See the shareholding structure are tight. Even in what's it called? In Wako to have foreign investor, but in Presco and Okumu, look at the shareholding structure. The Germans that there has a volume there for them. Means these shares will not be available. But if you come back to the banking sector, look at what is happening in Stanbic IBTC. It's not like other banks, like it's just recently that will see a change in holding structure in FBN holding. Before FBN holding, anytime it goes up, you see the next day they sold it down because of what the stock belongs to everybody. But now the shareholding structure is changing gradually, but people are still acquiring. You need to look at what is happening in that kind of regard. What is the sentiment in the market? More of primary market activities. Some companies are doing right issue and all that. How is the right issue? What is the price of the right issue and the price in the market? What are going to do the right issue to do? Is it to expand their business? Is it to go pay debt? You need to know why they're doing the right issue. This also form whether you should hold your position on those kind of stuff or not. What is the the current price to earning ratio, which everybody want to know, is it high or low? Because as we speak now, despite our market is still I tell you that our market is still cheap, because most of the general market price to earning is below 15 times earnings. It tells you that our market is still cheap, while some individual stock in the market has below 12 times of their earnings. It tells you that this is a good factor to that most of the companies are there. Foreign sentiment, yes, we know that foreign sentiment, because of our FS problem, they are not showing much interest. And that for me is a good thing for our market if that is so, because if they are to be in this market, as all these friends, they would have sold down to put everybody in red. But because they are not here, you can see how stable our market has been the last 3 years. For me, it's a good thing for every investor to look at. That is why I said, when I encourage the market operators, the regulators, to less to more people to participate in this market. Once we have more Nigerians that have knowledge and information to trade this market, we'll see more activities. If that is sustained, because now that we're seeing that foreign investors are not playing much here, it's good that you and I and others in the house are doing it. Another investor in Nigeria, that is good thing for us. Also look at the marketability. Which stocks are you buying? Is the market bad or good? Is it a good time for the market? Is it a good time for the for stock? You need to also look at all this when you are investing. It's very, very important. In every market, the market liquidity, market direction has about 50% influence on the market. Where the market is going, what the liquidity of the market is. Market heading up, it will drive some stocks. Market coming down. Also, company performance has about 20% influence on what? On price of stocks. If a company is doing well, when the stock hits the market in a bull market, it might rally for 5 days if the number is good and there's liquidity in the market. But when there's no liquidity in the market, the bear market, when it comes that result is good, it might rally for 2 days or a day. But market realize that this number is good. That means when a company performs well, market will treat it well. When it market also treat it the way it is. For me, you need to understand the history of this company and their performance. Once also want to look at it, look at the management of this company, their product line, because you want to understand the business model behind every number you are reading. Because if you understand the business model, you should know when they should do well and when not to do well, and why they should do well, and why their product or services should do well. Because today now I think that telecom business is social service, and also it has come to stay because of what has changed globally. Now everybody is on the net, on the digital economy. That has come to stay. Not only that, they're also expanding their business. Banking, no matter what it is, banking anywhere is the engine of any economy. You need to look at what is the service, what is the service or product behind this company's number. What is their business model? Is very, very key. Which sector are they operating? What is the demand and the of the market? Competition again is very, very important. In that sector where they are, what the competition is, the company that you want to invest. Are they the leader in terms of earnings, in terms of price, in terms of performance? You need to look at that. What's also the margin? You want to know how efficient this company is. There's some company in Nigeria today that at the end of the day, high costs are eating into their margin, and they are making billions. At the end of the day, their profit margin is below 10%. It's also not, but there are some companies today in Nigeria that their profit margin is above 40%. That means in every 1 naira in their gross earning, they return about 40 kobo as a profit. It's good, but you need to look at the sector to see what the profit margin that is also emanating for that company is very, very important for you to also know. Yes, I say market reaction. Market reaction has to do with sentiment. Sentiment is very, very important. That's why we technicians, we don't deal with sentiment, because you have seen the price of the stock at the end of the day. You want to know what is the activity behind that stock of the day. What is the demand and supply? What is the volume and the price movement? These are what sentiment will also reveal to you. Market sentiment is very, very important. You need to know what is the activities behind this price, what is the feeling of investors behind this price. Once you're able to get this, we also inform you exactly what to do with your position. If you see that yes, the volume traded is not encouraging, as we go further, you see that a company that is having a volume of less than 500, and you see that numbers of D is below 20. And you see that there's no volume. That means if you and I is buying it, or one person has one model, take the price up and bring it down. Such company, you as a trader, technicians, will not go into such stock because there's no volume. But company that has good volume and that you can play in and can trade it. That's why volume and price movement is very important.
Hello, you have 2 minutes more.
Hello,
you have 2 minutes more.
Okay, thank you.
We are getting towards your presentation.
Oh, yeah, thank you.
Okay, all right.
Yeah, that is how you should know. You want to know the sentiment behind the price, and all this will help you. What is the analyst no consensus, analyst perception, because for example now, analysts in MPC said, oh, Nestle is good. Analysts in ProShare said, Nestle is good. Analysts in Investor said Nestle is good. Analysts in Fertiva said that means analyst consensus is very good. Also, it gives you an insight to what they are seeing in that company, then market reaction. These are the things you also want to look at. Like I said earlier, to know a quality company, you must look at the fundamental and the technical. When you combine the two, you can now make informed investment decision. This is how to also go about the market. I mentioned that for you to know the market I want to bottom, you must know the direction of the market. I said earlier, 50% of the market direction also influence price movement and other activities in the market. That's why it's very, very important to know. When the market is about to top, look at also the company top. I mean, the market is about to go down. At the middle of that market top, market is about to correct. And that position, are you going to sell all you have, or going to sell half, take profit? These are the things the market top will help you down. Whether you want to sell down and wait the market to correct, then you cannot sell off immediately. That is how to market structure, which you understand. We have the market structure, we have what we call a accumulation stage, markup stage, distribution stage, and decline stage. At the markup stage is where people are buying. Markup is where the market is trying. That we call it a good trend. But at distribution, people are taking profit. At a decline, that's what say market is down, market is declining. That's for the four phases of the market, anytime, any day in the market. Have in mind that greatness is not achieved by using by having a 15 to 20 stock in your portfolio. I will tell you others, only way I'm talking. If you really want to make money in the market, it's not the number of stock you have, the number of good stock you have. I say minimum of 4% and maximum of 8%. For any healthy portfolio, no matter how many millions or billions you're having, that will give you an edge in the market for you to really take what information. Usually look at the market and know what to do exactly. Beware of what volatility in stock that are that has a little volume, like I said earlier about the sim volume and all those stuff. Also, beginners should not borrow money to trade a stock. You must learn first before you borrow money. Don't say because you are starting trade, no, don't do that. Leverage on your own money to start trading. As you learn, you can now expand your horizon by bringing more money. But don't borrow money to trade stock. You must use what you have to trade stock and learn in the process. You have also some training at your back experience to guide you when you are. That's why MPC is trying to put this webinar together to give you more idea and direction where you should put your money. Like as to go into the question and answer, where to put money, we will discuss them. The sectors where we have mentioned, but we can also go further to give you more information. With discipline when you are trading. Also have a track record that will help you to know where to sell, know how to cut your loss. When I say anytime cut your loss, is very, very important to know how to cut your loss. I say thank you again for listening. God bless you all. Yeah.
Thank you very much, Mr. Ambrose Amodion, for the wonderful presentation. He has given us the assurance and the comfort that there are still opportunities in the market. All you need to do is to combine the technical analysis and fundamental analysis. You plan your trade and you trade your plan to get good results. At this juncture, I want to share a short video clip of one of our clients who wants to share his investment journey so far with MBC. So that will be the next segment. And there's going to be a question and answer session after the second speaker's presentation. So you can send, already we have some questions through the registrants, but if you have more questions, you can drop it on the chat box. We'll pick it and shall be treated by the two presenters. Thank you. Can I see it? Okay.
My name is Julius Adere. I was a civil servant before I retired. I'm now a farmer.
We can't see the video, sir.
you all can see my slide, Abi?
Yes, sir. It's visible.
Okay.
Yes.
Good afternoon. My name is Atanda. I'll be presenting to you investing during times of political and economic uncertainty. You all agree with me that what you and I in this part of the world recognize as investment is equity and bond. And you know that markets are driven by so many factors. There are some factors that markets are driven with that will not give you good return. So in as much as we can earn a return, we can diversify our portfolio. Now that we want to move away from this equity and bond instrument, majority of the people that have money in this world now, the likes of Dangote, Aliko Dangote, Elon Musk, and so on and so forth, when you remove all their investment, I mean their quoted investment, the rest are alternative investment. So when market is not doing fine, when variable that drive the market is not moving fine, the best place to put money to have good return is to put it in alternative investment. Now, what are we going to cover in this segment? We are going to look what are turbulence market, what asset to invest in during the market stress, what are the factors to consider when you are choosing your alternative investment and fixed income, what are the features of these different asset classes, and alternative asset itself. Okay, now let's start with this one. What are market stress and market turbulence? Is the turbulences happen in all over the world, in all over the market in the world. Turbulences can be world turbulences, it can be regional turbulences, it can be country turbulences, it can be company turbulences. So what I mean by turbulences means that action, government action or government inaction that actually affects the market as a whole. It might mean that the market is going up or the market is coming down. The turbulence can be war, it can be government policy, it can be inflation, it can be technological change, it can be unemployment, it can be anything as long as it affects the market. So therefore, like what happened 2008, 2009, that is what turbulence is, when the market actually comes down. But it actually affects the equity market, but it affects the fixed income market most, especially all those securitized assets like mortgage-backed security, asset-backed security, and so on and so forth. But people have learned their lesson that they did not put all their money in one basket, which is equity and bond. So people are diverting their money to alternative investment. So market turbulences means that something that does not favor the market, but favors other assets. So if you are not favored by a certain factor in the market, the best place to take your money to is where those turbulences actually affect their portfolio positively, and it is always alternative asset. So what are the available alternative assets? We have fixed income. Fixed income, we cannot actually say it's fixed because there are some fixed income that are not actually fixed. So, but let's leave it at fixed income. We have private credit. Private credit means that where you grant credits, you know, like Yoruba call it ajo, peer-to-peer investment, whereby you lend money for 20 days, 30 days, 40 days. It's called private credit. It depends on your capital, what you have. We have real estate. People buy properties, properties that are physically owned is the one I'm talking about. I'm not talking about properties that are owned on the exchange. Properties that are owned by the exchange is actually affected by market turbulences, but the one I'm talking here is about physical properties. We have real estate crowdfunding. These are for those, because the first one I mentioned, which is real estate, actually require huge capital. But for those small investors who cannot afford the big capital, they will rather put their money together in order to go into real estate. So we have commodity. Commodity, there are some commodity that are exchange traded. Yeah, I'm not talking about those ones now. Those ones are called commodity features, but I'm talking about physical commodities now. So we talk about farmland, owning a farmland whereby you plant cocoa, plant, cashew, and so on and so forth. We have private equity. Private equity means that these are the shares of a company that are not gone public. And we have art and antiques. These are the people. In fact, in the capital market, we have someone whose investment is majorly in art and antiques. His name is Yamisi Shilon. In fact, is the richest art and antique person in Nigeria, and he's a stockbroker. So let's leave that aside. Apart from arts and antiques, we have infrastructure, we have hedge fund, and we have cryptocurrency. So all the available alternative investments are listed here. It's not left for you to choose the one you feel that you can actually put your hand on. It depends on the characteristic and the features of each alternative asset. But before you can choose any one of these, let's actually look at features of each one of them, because all of us are not rich the same way. All of us cannot take risk the same way. So let's look at the features of each one of these so that we'll be able to know which of these to handle. So the next slide goes to what to consider before investing in alternative assets and fixed income. We have capital size. Like I said, some people have 1 million, some people have 10 million, some people have 10 billion. It depends on the capital size. So we have time horizon, we have liquidity, we have fee structure, we have benchmark, we have regulatory framework, we have governance framework, and we have return and risk profiling result. So what am I saying in this essence? When you are investing in alternative assets, capital size matters most. Unlike equity market or stock market, whereby you can take 10,000, 20,000, 40,000 naira there. So in alternative investment, you must have large chunk of capital. Large chunk of capital, because if you want to buy real estate, you can't buy real estate with 10,000 naira. If you want to do private equity, you can't do private equity of 5,000, 10,000 naira. So if you want to actually invest in alternative asset, you must have large capital. Next is time horizon. If you are looking at alternative investment, your time horizon must be long. It must be long. Let's say between 10 and 20 years. 10 and 20 years. So alternative investment, you must consider that when you're investing, you must keep your money for a time being. The next thing is liquidity. Alternative investment does not generate liquidity. That is to say, they are not marketable. You cannot easily convert the asset into cash when you actually needed it. So you must consider that. The next one is the fee structures. Fee structure means that, like in equity now, they say when you buy shares, they charge your commission 1.35, blah, blah, like that. When you sell 1.35, the fee structure of alternative investment are quite different. So you must understand the structure, especially when it comes to hedge fund. The fee structure might be high, it might be low. It depends on the alternative investment you actually put your money in. The next thing is benchmark. Like, what do I mean by benchmarking? Like capital market, stock market now, we have all share index as our benchmark. The problem of alternative investment is that majority of them does not have a benchmark. So benchmark in this essence means that what you are going to compare your return with. So if you are making money in this, or if you are losing so money in this, so you compare with benchmark. Equity market as a benchmark, but majority of alternative investment does not have a benchmark. Next is regulatory framework. You know, in equity market and stock market and fixed income market, they are well regulated. But majority of investment in alternative assets are not regulated. Cryptocurrency is not regulated. Commodity is not regulated. Real estate is not regulated. If it is being regulated, it's going to be the minimal. The next one is governance framework. What do I mean by governance framework is the people that actually manage the alternative investment. Now, in the fixed income and equity market, we have a strong governance framework. But in alternative investment, we have poor or little no governance framework. And the last one is return and risk profiling result. So before you invest in alternative investment, you must provide the risk, you must provide the return. Because if you do not provide the risk and you do not provide the return, you get your hand bought at the end of the day. So having understand what to consider before you invest in alternative investment, which is capital size, time horizon, liquidity, structure, benchmark, regulatory framework, governance framework, return risk profiling. Then we now move to features of all these alternative investments. So we have fixed income now. So what I mentioned earlier on is the one at the in the first row. So capital size, time horizon, liquidity, regulatory framework, and so on and so forth. So fixed income, you can start fixed income with any fund. That is to say, as long as it is quoted on the Nigerian Stock Exchange. Remember that majority of the fixed income are actually OTC, but there are some fixed income that you can actually get on the exchange. You can buy with any fund. The time horizon is always medium to long. Liquidity is low because you actually see people that bring their fixed income to the instrument to the market and sell. Majority that buy fixed income, they are passive investors who actually own the security to maturity. Regulatory framework is very high because you need to register with the Security and Exchange Commission. Governance framework is actually high. Return on risk is guaranteed with low risk. And benchmarking is actually high because we actually have a benchmark in which you can actually compare your fixed income. The next one is private equity. You can start with any fund size. Remember, I call private equity peer-to-peer investment, whereby you actually take your money and lend to people, maybe for 20 days, 10 days, 1 week, collect the money, lend it to another person at an affordable interest rate. You can start with any asset size, any fund size rather. Time horizon is short, medium, and long. Liquidity is very high. It's very high because you keep cycling the money from time to time. Regulatory framework is medium to high. Governance framework is equally medium to high. Return risk profiling is high return and high risk because people can actually go away with your money without seeing them. Benchmarking, we don't have any benchmark. So we go to real estate. Real estate, you can actually start with medium to large capital size. The time horizon is long. Liquidity is low. Regulatory framework is actually low. Governance framework is low. Return risk profiling is high with a moderate risk. Benchmarking is very, I said varies here. If the real estate is actually rate, which is real estate investment trust, so there's a benchmark for it because it's actually traded on the exchange. But if it is a physical asset, the benchmarking does not arise. It does not exist. The other one is real estate crowdfunding. The one I'm talking about here is when 2 or more people pull funds together to actually invest in real estate. You can start with any fund size. Time horizon is long. Liquidity is low to medium. Regulatory framework is medium. Governance framework is medium as well. Return risk profiling result is moderate risk and moderate return, and benchmark is actually low. Commodity, next to commodities, you can start with any fund size. You can actually go to farm, buy gari, buy cassava there, take it here. You can start with any fund. Time horizon varies. It can be short, it can be medium, it can be long. Liquidity depends on where it is traded. Regulatory framework varies. Governance framework varies. Return risk profiling is moderate, and benchmark equally varies. Like I said, the reason why we have varies here is because there are some commodities that are actually traded on the stock exchange, while there are some commodities are not traded. Now, you see, we move ahead. Private equity, the capital size is very large. We have long-term horizon. Liquidity is very low. Regulatory framework is high. Governance framework is high. The return is very high with high risk, and the benchmarking is medium. We have art and antiques. You can start with any fund. The term horizon is between medium and long. Liquidity is very low. Regulatory framework is low. I don't think there's any regulatory framework on the part of SEC that regulate art and antiques. We have governance framework. Governance framework is low. We have return risk profiling. Medium return and high risk, benchmarking does not exist. We have infrastructure. Infrastructure means putting money, build shop, build market, build road, and so on and so forth. So capital size is very large. Time horizon is large. Liquidity is low. Regulatory framework is high. Governance framework is high. Return is very high with high risk. The reason why I said the return is high and with high risk is because of the regime change. If there's a regime change and the government come, it does not favor them. They can take the project or infrastructure from you and so on and so forth. And benchmark is equally low. The next one is hedge fund. You can start hedge fund. Remember that hedge fund is a strategy. It's not a kind of asset size, a strategy. People that deploy hedge fund as a means of making money look at it as a strategy. It's not hedge fund because we have a lot of hedge fund. Hedge fund alone can be discussed for for 1 week without stopping. But you can actually start with any assets fund size. Time horizon varies because I said there's some hedge fund that the time horizon is long. There's some that time horizon is short. There's some that time horizon is medium. Liquidity varies as well. Regulatory framework is low. One of the problems with hedge fund is that it is not regulated. You know, I told it's not regulated because hedge fund is not an asset class, but it's a strategy to make money for people. Governance framework varies. Return and risk provide. We have high return and high risk, and the benchmarking equally varies. So the next one is cryptocurrency. You can start. Cryptocurrency is a new instrument that people are just getting acclimatized to it. You can actually start with any fund. Time horizon varies. You can buy it today and sell today. Liquidity is very high. As long as it takes to the market, you can get it done. Regulatory framework is low. Government is just trying to regulate it, but regulation has not come up. Governance framework is medium, not high, and return risk profiling is high return with high risk. Benchmarking is low. Farmland can be any fund size. Time horizon is long. Liquidity is low. Regulatory framework is low. Governance framework is low. Return and risk profiling is equally moderate with moderate return, and benchmarking is now. I have listed all the features and equally examine all the features of all these alternative assets. So you now ask yourself, what is your capital size? What time horizon are you looking at? Do you need money often to determine your liquidity? Is this alternative asset being regulated? Does it have high corporate governance? What are the risk and return characteristics? And what are the benchmarks? All this will be put together. After you have put it together, you examine it, you do your due diligence. You now determine within yourself that which one will I put my money into. So having understand this now, or looking at this thing now, it will give you an insight as to the type of alternative investment to put your money in when the market is in turbulence. So let's after this slide. We look at alternative asset allocation around the world. When you look at it now, I look at America, I look at Europe, I look at Asia, South Asia. What I mean by South Asia, I mean Australia and New Zealand. And we look at Africa. When you look at it now, across the board, majority of people or investors, whether institutional or individual, they put their money in equity, followed by bond. The least among them are actually alternative assets. When you look at all the zone, it is only in Africa that the amount deployed in alternative investment is just 5%. When you look at America, we have 20% of people that invest in alternative investment. When you look at Europe, 15% is manageable. When you look at Asia, 10%. When you look at South Asia, 15% is only in Africa. It now means that what this signifies is that alternative investment in Africa, especially in Nigeria, have not been tapped in. If actually wants to make money, there are some people where they get their wealth from is actually from alternative investment. But we investors here, we are just focusing on equity and bond. Whereas we can actually make our money in alternative investment. I have a client in my company. He deals in alternative investment, which is real estate. If he makes money, he can make 200 million, 300 million. So after doing that, now he just take his money and give it to me. I will use the money to buy bond for him or her. You understand now? So what I'm trying to say is that there is a great opportunity for investors in Nigeria to actually tap opportunity in capital market, which is alternative investment I'm talking about, to actually make money. Because when you look at it now, it's actually 5% out of 100%. Now, it will get to a time when equity market will be saturated, stock market will get to its maturity. I mean, majority of the flow of Nigeria stock exchange will mature, while other companies are springing up. So if a company is matured enough now, it means that opportunities to make money in the market will be limited. So another way of making money is to divert your money from capital market or fixed income to alternative assets, because the percentage of investment there is 5%. So as time goes on, you see that investment in alternative market in Africa will be growing from 5%. So let's say the next couple of 10 years now, it might rise to 15%. Next one is alternative investments with other investment across investor. Let's look at it now. I'm talking about Nigeria now. We look at bank, insurance company, foundation, endowment, pension fund, and net worth. When you look at the three bar that is there, the first bar is talking about alternative investment. The second bar is talking about fixed income. And the last bar is talking about stock market. When you look at bank don't actually put their money in alternative investment. Majority of the bank money goes to fixed income. Fixed income in form of cash. Your bank invests in cash and
hello, Mr.
Yeah.
You have 3 more minutes.
Okay. Now, when you look at all of them, you can see that it is only few of them that put their money in alternative assets. So insurance company put more of their money in alternative assets, but bank, high net worth, and the foundation put less of their money in alternative investment. Okay. Now, what are the benefits of investing in alternative assets? So we have a capital growth. If you put your money in alternative, that means to say the money keep on rising, because as inflation goes ahead, the money keep on rising. We have risk diversification, meaning that you try to reduce your risk by combining it with traditional assets. The money is safe. Another one is income generation. That is to say, if it's rent, if you get rent, you get coupon, and so on and so forth. The last one is inflation protection. Now, because of that, let me quickly look at what are the role of asset classes in multi-asset portfolio now. Now, I look at capital growth, risk diversification, safety, income generation, inflation protection. So each one of these alternative assets has their purposes. The purposes cannot be equal, cannot be the same. So I just highlighted here what each of these alternative investment actually serve. So for example, now like fixed income now, fixed income does not serve as a capital. What it serves is risk diversification, safety, income generation, and inflation protection. And let me quickly take cryptocurrency now. Cryptocurrencies, it doesn't serve safety purposes. It doesn't serve income generation, and so on and so forth. The only two purposes it serves is high capital growth and high what? Risk diversification. Now, when you look at alternative investment, how does it improve our portfolio? Now, when you look at it from in terms of we have stock, bond, stock plus bond, and stock bond and alternative investment. When you look at them on the right-hand side now, you will see that return that is being generated as a result of adding alternative investment to traditional assets is far more superior than if these assets are invested in isolation. The same thing with risk. When you look at the risk, when you add alternative investment to your traditional asset, I mean equity and bond, the risk of the portfolio is reduced. That is the benefit of adding alternative investment to our traditional asset. Now, we go ahead now. Look at the past and look at the projection. So when it was started, it was 4.1 trillion in dollar. And in 2025, it is projected that it's going to be $17.2 trillion. So that shows that alternative investment is an asset to watch out for. Now, we have top alternative asset manager in the world. These are the people that their job is not equity or bond. So they only specialize in alternative asset. And these are the top 10 that specializes in alternative asset. We don't have much of them in Nigeria. That's why we cannot put Nigeria on air. So therefore, thank you because of time. Thank you so much and God bless. Thank you for listening.
Yeah, Mr. Otana, thank you very much for the wonderful presentation.
Getting more currency, high currency. Now we're depending on only oil to give us a. That's why when oil price was up, we are rejoicing. But because we are producing a below quota, that's why not benefiting from oil price. But if we can open other sector of the economy where we can do export with time, and also we must look inward. Not that we must depend on it. Important. It's most people that want to import. That's why let's look inward and make our economy to grow. Then we'll see foreign food coming. Then less pressure will be on our reserve, and the economy start appreciating. We need to really start generating more foreign currency by exporting. Once we have a trade balance, all this we can't remain stay by 5 years. No, it's a nation that we are rolling. We are moving. We can bring more ideas that will make our economy to come. Not that Nigeria that the economy going to go down. Inflation every day. No. I believe that with time we'll get it right. We'll start appreciating. Don't be afraid of the next 5 years. No. We're very next 5 years we'll be a better place as a nation.
Okay, thank you. We'll be picking a question from the participants. The question is alternative investments, considering the immense return alternative investment offers and the high risk associated with it relative to stock, what are some of the steps or measures I can take as an investor? Mr. Toda,
okay,
the question is for you.
No, see, to invest in alternative assets, you need to do a lot of due diligence. Your inability to do due diligence can burn your finger. So unlike equity, whereby you can do little due diligence, enough due diligence is needed. So due diligence as per the type of asset you want to invest in, the capital size, government regulation on it, and some other things that you need to emphasize on, because it's not an asset that you want to put small amount of money in. It requires a large chunk of money. So if you want to put your money in an alternative asset, you must ensure that you do adequate and balanced due diligence, so as to ensure that what you are actually looking for in terms of return are realized.
Thank you. The next question is for Ambrose Omodium. Where best should I invest my money for a long-time horizon of 10 years?
That's a good question. I love that. I like people that think long-term. One, I told you that communication has come to change. Now the economy, we are seeing a digital economy all over the world. If you are thinking long-term, look the world of telecom sector and look the world of agriculture sector. Oil sector will continue to oscillate and that highly risk and oil sector. But for agriculture and telecoms, I'll tell you, and healthcare, look at this sector, you can go there and invest for long term. Yeah.
Thank you. We've come to the end of question and answer session. Okay, I want to share. Yes, I want to briefly discuss our products. At MBC Security, we participate at the primary offering of initial public offer, right issue, private placement, and as well as secondary markets. To support this, at times we have financing and refinancing offering as well. If you had listened carefully to the testimonial that we shared, at a point in time, he sees the opportunity of our financial and refinancing offering to take position in the market. And I think at the end of the day, he was very happy to have used. I've shared. The next segment that we play is the money market. We buy treasury bill for our clients and as well commercial papers. We also participate in fixed income trading, bonds, which include state government, corporate, and Euro bond. We thank you for your time. And we believe that you've been